Welcome to the People, Property, Place podcast with me, your host, Matthew Watts, founder and managing director of Rockborn. This is a podcast where I share the stories, views, opinions, and career journeys of the movers, shakers, innovators, and leaders in the real estate industry. Welcome to the People, Property, Place podcast. Today, I'm joined by Lucy Gordon, founder of Farley Cove, a London-based real estate consultancy offering bespoke financial modelling expertise, debt advisory, and transactions assistance. Welcome to the show, Lucy.
Hello.
So, I always like to start by asking people how you got into property and why you wanted to pursue a career in this space.
Yes, so I originally wanted to be an architect. So the first bit of work experience I did when I was 16 was with an architect's office in Winchester. But my mind has always been much more mathematical than creative. So I decided to go down a slightly different path. I studied economics at university and then found out about masters in real estate at Oxford Brookes. So I went on and did that and I absolutely loved it. And that's where it all started.
And did you have a relation or were you just inspired by the built environment?
Yeah, I just love buildings. I think always just have loved architecture, and that's why architecture was the first thing. But as I say, lacking creativity to be able to actually do that as a career. But yeah, I've always just loved buildings, and therefore working with them and working with a tangible asset as opposed to shares that are meaningless in the grand scheme of things. So that's why property was the one that appealed to me.
Yeah, it's interesting. I've had a couple of conversations recently where architecture is the gateway, and you enter in through that gateway into the world of property and realise that there are so many different routes. So for you, it was that strong mathematical brain and technical capability combined with your interest in property led you along a path to find out that the finance aspect of real estate was really what you're interested in.
Yeah, well, I sort of fell into it accidentally, actually, because no one in my family was in real estate at all. But when I did my master's degree and I said to my dad, do you know anyone who give me some work experience? And the person he recommended was Manish Chandy, who runs Clearbell Capital, which was Mount Grange Investment Management at the time. And so I emailed him and asked if I could come and join for a week or two, and ended up doing an internship with them for 12 weeks and then staying for 7 or 8 years. And that's how I became an analyst initially, was because I just went there and turns out I was actually quite good at modelling and Excel. So that's how that bit of it started. But one thing I always loved about property, and what I love about my friends from Oxford Brookes, is just the scope of work that there is within the property industry. Everyone does something completely different, and it's fascinating.
So you've had quite a few internships. I get the impression that you've worked quite hard, like in summer holidays in between university, Jackson Chris. It always seems that you've had that flair or that drive to kind of get up and go and experience different cultures, companies, and opportunities.
I think it's because I didn't know exactly what I wanted to do when I was younger, and therefore going and trying different things certainly would help with trying to work out what it was that I liked.
Yeah.
And ultimately property was the thing that I liked the most, and also working for small companies.
So when you joined Clearbell on a 12-week analyst program, what were you doing there, and what did the early years of Clearbell look like as an analyst?
So I initially went in, say, as an intern and just doing very minor Excel tasks, putting together things and attending asset management meetings, and then progressed on to be doing a lot more cash flow modelling and investment committee paper writing and that sort of thing. And then as my career progressed, I then got into more of the transaction assistance in terms of helping do the execution of the deals when we went under offer. And also by the end of it, I was doing all of the debt financing for all of our assets.
And in terms of those assets, can you just give a bit of an overview of various different funds? Was it separate accounts? Was it balance sheet capital? Were you JV'd with operating partners?
Yeah, so Clearbell ran, or still do run, a bunch of discretionary funds, and some of the investments had joint venture partners in them. They did a nice mix of asset classes, working with different people. So I made a good amount of connections there. It was really nice.
And you've got a good range of skills and an overview of different asset types and complexities.
And by the end, I was sort of working on mostly the non-mainstream assets. So I'd end up working on the private members club and the sort of mixed use industrial office resi sites, rather than just the mainstream offices and industrial.
And from like a technical perspective, is that everything from underwriting new transactions to modelling various different asset management scenarios to putting together the fund model? Were you kind of wearing lots of different analytical hats, or was it quite siloed?
My role was I sort of did more of everything just because I ended up being there for such a long time. We did have one analyst who's more senior than me who did the fund model, but everyone, the rest of us all just did a bit of everything. And particularly, I suppose for me, the debt modeling, because I was the one who was doing those negotiations with the banks, and therefore being able to actually go through and check those those interest rate calculations and things like that, and actually model correctly, was very helpful for the negotiations for that.
And how, from a training perspective, was there, what training was on offer? Was it, on the job, just learning from someone more senior? Did you have kind of third-party training as well, or?
No, not at Clearbell. It was all internal. There was quite a big analyst team, so therefore there were lots of people to learn from, but equally I became the sort of second most senior analyst within not a very long amount of time, just because, there was a reasonable amount of churn. So it was all internally taught, and I ended up teaching people. Probably year 2 of being an analyst, I was teaching the newer people.
The next cohort that came through. In 2019, you left Clearbell. We obviously didn't know COVID was around the corner, to set up Farley Cove. Why did you leave Clearbell, and what was the driving force behind wanting to set up your own business?
So I was suffering from quite bad mental health at that point and a lot of anxiety. And I've been going through it for maybe 2 years before that. And at that point, that summer in particular, I just felt like I needed to make a proper change that would help sort this out, because Clearbell were really, really good about it, and they let me, go part-time and work from home. But ultimately, it didn't really work with the business at that point in time. And so I needed to come back full time, and I just couldn't do that. So I had to leave, and didn't know COVID was around the corner. But I started doing Farley Cove purely because I just felt like if I could just do a little bit of time by myself and sort of work out how to get over this anxiety and these feelings, that I would then know what I could do afterwards. And so I started doing the business and started doing consultancy, and actually ended up with quite a lot of clients and quite a lot to do, and I loved it, so kept at it. So
you never kind of left and set it up with an intention. You kind of left to kind of protect and look after yourself, get better, and then one thing kind of led to another, and you had a bit of inbound work, and suddenly you had a lot of work on your plate.
Exactly, yes.
And so as a business, no doubt it's evolved, but can you give me a bit of an overview of where the business is at now and what it is that you do?
So the majority of the work that we do is financial modelling. So for startups or people looking to do sort of mergers and acquisitions because they have a one-off project that they need just extra support on, or for people who are small property investors and don't have the amount of work required for a full-time analyst, or equally they don't have the sort of financial capacity for a full-time analyst. And so we come in and do the work for them then on that. So either the sort of one-off project or the monthly retainer support for them. And then we're now growing the business to be offering analyst training, because I think some of these companies who have tried to find, some of them have tried to find analysts and haven't managed to find anyone who's particularly good. And so that's where we have come in and done that and taken over that role. But it would be nice to be able to help them find someone good in the long term, because we can't be there for everyone all the time.
So you help set up their infrastructure, help them with some projects that they need some additional help with, audit, and make sure that their models are fit for use.
Yeah, lots of model auditing and creating new models and doing the same thing that we were doing at Clearbell in terms of running the models and running scenarios, but just doing it either in their existing model or in a new model that we've built for them. And I say, it's really nice working for, again, most of them tend to be small businesses, just because that's who I like to work for and that's who I have sort of gravitated towards. But it's really nice working for them and working on a whole wide range of different projects and with different people. It just makes it very fun and interesting.
And different risk return profiles, asset classes. Are UK focused
yes, they're all UK.
And so in terms of analysts, there's a number of different types of analysts, and we kind of maybe touched on it earlier, but you've got obviously investment analysts, fund analysts, portfolio analysts, asset management analysts, development analysts. Do you tend to segment them that way, or how would you, when someone comes to us and says, look, we're looking to hire an analyst, it's quite a broad range of what analysts actually are. You can have analysts from investment banks, private equity firms, operating companies, consultancies, ones that just put numbers into Argus, others that can build fully bespoke models from scratch, others that come from an accountancy background. How do you kind of define an analyst? Or is it too difficult to do so?
I suppose it's quite difficult because my background has been on doing everything. So every asset class within real estate. I've built models and I've taken models that already exist and used them. I did do some of the fund modeling at Clearbell when I was there. So I'm used to everyone sort of wearing multiple analyst hats, whereas I know that in some companies, they tend to be very, very specific. And when you look at some job descriptions now, you think, wow, that's really very specific as to what you're looking for. And actually, perhaps looking for someone who's broader and can help in more areas might be more helpful for some companies.
What do they actually do day to day?
It very much depends on the company, as we just said, in terms of what they're actually looking for. But they research, evaluate, and analyze real estate. And so they can fall as far down each of those categories as you sort of want in terms of what you're looking for. So that really depends on what other support you have around you in your company and how deep you want them to go down different pathways. But in particular, it's those running the model and helping to analyze to see whether property is worth acquiring and when is the right point to sell based on your asset management initiatives, and really just assessing the viability. And then they can do further work around that in terms of the research and the investment committee preparation and things like that.
Okay. How do you work out if someone is a good analyst or an average analyst? Obviously, as part of an interview process, there's kind of normally modelling tests. But before you even get to that stage, what kind of questions could people ask to kind of work out if someone is technically astute and capable?
When I took my APC, they tried to ask a question that covered this, which I thought was quite funny. They asked, what's the difference between IRR and XIRR? And I, at the time, had absolutely no idea what the difference was, which doesn't necessarily prove that you're a good analyst or not, because I'd never had to understand the difference because I'd never had to build a model.
Yeah.
Whereas now I build models and now I do know the difference and I can tell you the difference. But it's difficult to establish whether someone is good just from a question. But some of the things that I look for when I'm trying to assess whether people are good, initially the key one is about the best modeling practices in terms of how do they actually lay out their Excel? Do they format all their numbers correctly? Do they put the titles in bold? Just things that make it easy to look at and understand, because if they're going to create something that you want to use long term and be able to use for future people once they've left, then it has to be easy to comprehend. So that's the first thing. You can probably tell that. I don't know whether you work in recruitment, whether you can tell that from someone's CV. If they've kept it, again, if they've laid it out neatly, then you can hopefully think that they're...
Yeah, you can definitely assume certain things like attention to detail, formatting, and basic parts, but it obviously does need some further forensic investigation.
Yes.
There's some other thing, whether it is someone's academic background, the confidence they talk and which around modelling, even the business that they're at the moment, whether that bias or not, that kind of comes into trying to establish whether someone is capable and has got the skills before you even ask pressing questions. But I'm interested to hear from you.
Well, some other things are really whether they understand what the financial model is used for, because I think it's quite easy just to be following instructions and not really have understood what you're there for. Like, do you understand that the model is to forecast the investments and to assess the viability of it? And then the last thing was just around auditing your model and making sure that your numbers are correct. Like, how would you do that? How would you make sure that what you're presenting to your investors is correct? And quite a lot of that comes down to, do you understand property? Could you do it on a piece of paper and get roughly the same answer? Because you need to be able to look at that lease and think, does that make sense that they're going to be going from this rent to that rent? And does the exit value therefore make sense based on this being the net operating income at the point where you sell it? So I think that's, for me, key things are, yes, making sure that it's formatted correctly and that they can actually, other people understand it, but also that they fundamentally understand real estate and what they are trying to achieve with the model.
And can come up with some fair assumptions to complement the brochure or what is being given to them.
Yeah.
And we place numerous analysts here at Rockbourne, and what we find is candidates go for a modelling test, normally at a second stage, and it could be anywhere between like an hour and 3 hours normally. And they're designed to not necessarily be completed. And I think the ones that we see that do quite well in it, they, as you touched on, they format it and they lay it out well. The formulas are clean, they're not hard coded. But also, even if they get 70% of the way through the model, at the end, when they sit down and they discuss it with the principal or the hiring manager, they're able to say, if I had an extra hour or 2 hours or what have you, these are the steps that I would have gone through in order to reach the desired outcome or complete it. And I think having that rational mindset and attention to detail when they're actually building it has really enabled a lot of people to pass that step, even if they actually can't complete the model itself in the allotted time.
Yeah, it's very easy to be an analyst and never have built a model, and therefore to actually be presented that as a modelling test when you first start, to be presented with, go ahead and build this model, it can be quite daunting. But I think if you understand the principles of real estate and what you're trying to achieve, then you should be able to create something which makes sense, even if it's, say, not completed, because these things take time, and it's better that it's correct and not finished, and that you can come back and do it later, than you just rush through it and create something which spews out an answer, but that answer might be completely incorrect.
Yeah. So as well as working with companies just in terms of helping them refinance, underwrite new acquisitions, hold sell analysis, you're also doing a training program for analysts. Can you just expand a bit further on that and why you've decided to do that?
Through Farley Cove, we have been presented with quite a few models from our clients, and some of them are questionable.
Okay.
And very difficult to follow in particular. So they might be correct, but trying to audit them takes forever, and trying to use them also takes forever. So we want to try and instill a better fundamental background to analysts, so that then they can build on the basics much better. Because I think when someone teaches you bad Excel skills, you pass on those to future people, and it just escalates and gets worse and worse and worse. So what we're trying to achieve is to try and teach people fundamentals of it, so they can build a cash flow and actually a portfolio model from scratch that isn't so complicated that no one else can come and use it, but also that can be used in all circumstances and can be built to be made more complicated if you need it to be more complicated.
Yeah.
So we've got a basic course that teaches you to build the portfolio model to an unleveraged cash flow point. And then on top of that, we then have a couple of add-ons where you can then do leveraged cash flows, looking at CapEx loans and mezzanine loans and refinances. And then we've got one on waterfalls and promotes. And then a third one on doing scenarios and sensitivities.
And they're set up so depending on people's capabilities, they can come in and jump in on a course or get topped up in one area if they're deficient in the debt financing piece, kind of modelling debt into a model.
Yeah, and that's why we did them separately, because some people already know how to do the model or already have a model that they like to use, but then they really struggle with understanding debt terms, or they really struggle with trying to understand the promote and how to model the promote. So that's why we split them out separately, because there'll be some people who don't need that basic course.
And who is your, and it might sound like a really obvious question, but who is your kind of target avatar? Who you think would be purchasing this course?
It's targeted at sort of a wide group of people, really. We're looking at anyone who's studying their APC and they're doing the financial modelling or the sort of the investment pathway, and therefore need to improve their financial model module level, then they can do this. But equally, people who are graduates or current analysts who want to upskill, or even people who are asset managers who don't really understand what their analysts do, it's helpful for them to be able to come in and view this course and understand more about how Excel works, because we do talk about quite a few of the property things, but also just the fundamentals around functions in Excel and conditional formatting and name manager. So we cover a lot of just general Excel skills in there as well.
There are a couple of other courses on the market that typically clients or employers have paid to put their analysts on. And certainly the kind of the conversations we've been having as a team in the last 6 months with clients are that due to COVID, that support and training hasn't been as good as it has in previous years. And actually there's quite a big skill gap in the analyst cohort that is coming through at the moment. And that's quite a sweeping statement, but we're having multiple conversations with different clients who are facing the same thing. What's awesome about your course is that individuals can do it in their own time, and it's at a premium price point, but it's also accessible for someone who, if they are looking to smash the modelling test, a salary increase or a raise that comes with it will more than cover the cost of it. But also fitting around a busy life at work, but also outside of work, they can do it in their own time, right?
Yeah, so it's going to be rolled out every couple of months, and you get access to it forever. But the reason why we roll it out every couple of months is that the main course is a 4-week course where you get a 4-week support program, and during that time we're going to be having Q&As with industry experts, so that you can build on the knowledge that you're getting from the course, but also find out how that helps in real life and what that means in real life. So we're having asset managers and commercial agents in the debt course. We're going to have a lender, someone from Rockbourne coming on to talk about recruitment and how people can improve their CVs and their sort of interview skills to make sure that they can show how good they are as analysts.
Yeah.
So I think if we wanted to pitch it differently to other analyst courses, because there are a couple out there, but I think by being able to have those connections and talk to real life people and try and translate your model into real life situations will help people's understanding a lot more.
So in terms of the kind of the future, your modeling training courses are going live now. What you've obviously hired Angela as well, and I'd love you to tell me a little bit more about her. But what are your plans for growth for Farley Cove and the future of the business?
So many plans. More ideas keep popping up in our head, and we don't have enough time to do them all. No, ultimately, we want to try and get a few more employees ourselves so that we can offer more analyst support to more companies and more businesses, but also to be able to create something that's a bit more robust and allow people to be able to use the models themselves a bit more easily at home, which we don't do now because they are very complicated in terms of what their functionalities, which makes them a bit harder for people to use if they aren't that good at Excel. So that's one of the things we're thinking about growing. And then a couple of other business arms that I can't talk about just yet, just in case they don't come off.
But you've got plans.
We have
plans to scale the business
and
build on those different areas. It's obviously a funny time in the market at the moment, and it's changing on a daily basis. We're sat down today on the 4th of October, and this is going to be released hopefully in the next couple of weeks or so. But you must have a lot of inbound work coming with people asking you for your opinion and your model's opinion on the changing interest rates, inflation swap rates that are flying around as well.
Yeah, so the particular one that we're doing a lot of modelling at the moment is around the debt because of the base rate constantly being under review. So we're doing lots of scenarios around how delaying debt will impact people's returns. Equally, a lot of our clients are sort of coming back with a lot of changes to models where they're looking at acquisitions, because who knows, one day it's looking fine and the next day it's not. So we're changing debt, we're changing yields, lots of scenarios going back and forth to try and establish what's the best decision to make. And I don't think anyone really knows what the best decision to make is with investing at the moment.
But you're on hand to help them make them, give them as much information to make
we
considered.
We give them as much information as possible and show them, what those various outcomes can possibly be, and then they ultimately are the ones who have to make the hard choice.
Yeah, no, makes sense. So what advice would you give to people entering into the world of real estate?
It's it's a big industry. There are so many options around what you can do. So I suppose just keep your eyes open and also make connections. It's a very sociable industry. So make sure you keep up with the people that you meet, because you never know when you might come across them again or when that might be a useful connection to have. Yeah. I don't think I have anything more to add.
No, I think it's I think it's such a small but vast industry with so many different career options and routes to go down. I think you're wise. You never quite know when you're going to meet someone and in what capacity. So, getting out, meeting people and building those relationships is really, really important. So as we kind of draw to a close, a question that I ask everyone is, if you're given £500 million of equity, who are the people, what property and which places would you look to deploy that cash?
Given the turmoil we're in the moment, the first thought I had was, could I build a reservoir?
A reservoir?
Yes. But I realised 500 million would only build a reservoir for 500,000 people, so that won't make much of a difference. So then my next thought actually was around small businesses, because I'm very lucky. I live in an area of London that has a lot of small businesses that are thriving and the high street's thriving, and it's just a lovely place to live. So actually my thought was to invest in small businesses that are going to help improve local high streets, because that makes, everyone happy, but also increases property values and brings back to life all of those high streets that are not looking so perky at the moment.
Amazing. Well, Lucy, thank you so much for joining me today. Excited to work and
having me.
Support Farley Cove on this very exciting entrepreneurial journey. And analysts, or frankly anyone in the real estate space who wants to upskill, check out the courses on the website. And looking forward to seeing what you and Angela achieve as you scale the business.
Thank you. It's been a pleasure to be.
Thanks. Thanks for listening to this episode of the People, Property, Place podcast. If you found it insightful, feel free to share it with a friend or colleague, subscribe, give us a rating, like or comment. It helps tremendously. It'd be great to hear from you on LinkedIn. I'm super open-minded to recommendations of which guests you think we should get on the podcast or areas of the market that we should explore further. So do drop me a message. The People, Property, Place podcast is powered by Rockborn.
The team recruit experienced talent for real estate private equity firms, investment managers, REITs, property companies, and advisory firms across the investment, asset management, development, fund management, ESG, cap markets, investor relations, and general practice space. So if you're considering your career options at the moment or looking to attract top talent to come and work for you, head over to the website www.rockborn.com, where you can find a wealth of resource to aid your search. Have a great day wherever you are, and I look forward to catching you next time.